Graham, investing in
Lindsay,
Asia is the theme.
Yes.
But Asia, it's like saying investing in emerging markets, because investing in Asia, I mean, Asia's a massive, massive block. It could be Indonesia, it could be China.
Absolutely, absolutely. I mean, across Asia, we've seen good valuations appearing, but I think China is really the one that's most interesting. So what we've seen is the market come down since, let's go back 5 years, to 2007. The market's halved in price and earnings have doubled. So the PE's gone from about 36 to 40 times to sub 10. So it's looking very interesting.
Well, every time I wake up in the morning and put on the CNBC Europe and I look at the Shanghai index, the Shanghai Composite Index continues to erode.
Absolutely.
And yet I see other markets, for example, the Kospi in South Korea, are going up. I mean, is that because the Shanghai Composite is misrepresentative of the broader Chinese economy, or is it because these stocks are just simply out of favour and people are discounting some economic shock in China?
Yeah, I think it's the latter. So I mean, as with all indices, it's not exactly representative, but it is their financials or the big block, there's manufacturing, so it is fairly representative. Probably more representative of the economy than the South African indexes of this economy. And the earnings are coming through. We've seen substantial earnings growth coming through, as I said, doubling in earnings in the last 5 years. And so shareholder value is on the agenda. The returns on capital are good. But yet we see just negative market sentiment. The market, I mean, breaking to new 3 or 4 year lows just last week.
Yeah,
so
down to about 2004, 2005, I think, on that Shanghai Composite,
yes.
And then rallied quite sharply with news of potential infrastructure stimulus
yes.
from the Chinese
yes.
authorities. But still, how easy is it for us to do? I mean, you're going to say, look, just phone up East
no.
and you can invest with us. But how easy is it for somebody to access not only China, but also other Asian markets?
Yeah, I mean, there are lots of ways. So the easiest way for retail investors is just through registered funds, through mutual funds. There are large parts of the Chinese market that are closed off to foreigners or difficult to access, like the A-share market, but one can certainly access the companies through Hong Kong and through other exchanges. So it is easy for a retail investor to invest.
Is this a story that's going to go? I mean, is it going to carry on? And again, the cynics would say it's all in the price already, and at some stage it's going to pull back, and the Chinese story has done very well, but there's going to be a pause, and the sort of figures that are being bandied about China being the biggest economy by 2020, and then it's going to be taken over by India by 2040 and 2050. They say it's all very fanciful, but the United States will stay at the top. But you obviously think that the Chinese growth story and the Asian growth story has got a lot more legs.
Yeah, I think the growth story is intact. Clearly there's a slowdown in the Chinese economy, and that's, I think, a very deliberate strategy, and I think it's appropriate. The property bubble is deflating, and that's appropriate. But I think what is the most interesting point is the one that you picked up on earlier. So despite slowing down to 7%, I mean, I wish we could say that about this economy, that we're slowing down to 7%. But even with that slowdown, we're still seeing within the sectors of the market, specifically the sectors which are non-state owned, so the proper private sector within China is delivering the earnings, and they are thriving, and growth continues strongly. So it is a story that I believe has legs, and it's not only China, but we're seeing, I think, Korea is relatively cheap. A lot of the North Asian markets are looking relatively good.
Okay, China and Korea. I know you also look at Indonesia. You look at the whole region. What about the sectors? Let's say that somebody says, right, I don't want to go into a specific country, a specific geography. I want to pick a specific sector. Would it be consumer-orientated industries that you would look at? I mean, that's the one that shouts out to me because of the population.
Yeah, you opened up by saying Asia is very heterogeneous, and so it's difficult to say across the 10 markets where we invest and across the sectors as a theme. But I think consumption is an ongoing theme. Specifically in China, we've seen a deliberate slowing down in investment and a boosting to consumption with wage rates rising very strong at the bottom end. So consumption is definitely picking up. So that's a theme that I believe will continue within China. But it's more to do within China again, it's to do with the ownership, I think, of the companies. So often the state-owned companies may not have shareholder value at the top of the agenda, whereas the true private sector does have shareholder value. So it's a little bit different. It's not so much sectors as we think of them, but more looking at the ownership and where the value is being added.
Thinking naturally, would you look at something like Richemont, for example, which sells a lot of luxury goods to the Asian consumer?
The luxury goods story is extraordinary. I mean, all over, whether it be Hong Kong, Singapore, Beijing, Shanghai, it is extraordinary. The amount of floor space devoted to top-end retail and the desire for Asian shoppers to access luxury consumer brands is extraordinary.